You know, when we hear Larry Fink of BlackRock saying he wants to tokenize everything, you know it's big because it takes a lot to move the needle at BlackRock.
Cathie Wood, the CEO of ARK Invest, just dropped a mind-blowing theory. She's doubling down on her bold Bitcoin prediction, 1.5 million per BTC in just 5 years. If you're feeling uneasy about Bitcoin hovering around 80K right now, hit that like button and listen up. This could change your perspective.
I want to start right with Bitcoin and what you see as the outlook for Bitcoin's price. In recent weeks, you've come out and said $1.5 million per Bitcoin by the year 2030. Since then, though, we've seen quite a few outflows. We've seen a lot of volatility. Shonali just went through that. Is that still your view? 1.5 million by 2030?
Yes, it is our view. I think right now we're in a risk-off period generally. And if you've been watching Bitcoin, it's almost been a leader in terms of risk on, risk off. So I think that's what we're seeing. If you look at our on-chain analytics, what you will see is that we are in the middle of, we're a little bit more than halfway through a 4-year cycle. We think we're still in a bull market. And we believe that the deregulation that we're seeing here in the United States is going to be very important to institutions moving into this new asset class. Asset allocators have to have a point of view on this new asset class. And we think by putting it in portfolios, risk-adjusted returns for the entire portfolio will go up.
So why is ARK Invest so confident that Bitcoin is a strong buy at these levels? Cathie Wood understands something that you and every subscriber to this channel already grasp. 3 massive factors are at play. First, the US government is quietly accumulating Bitcoin in a cost-neutral way. Bo Oni, Trump's executive director of digital assets, made it clear. We want to get as much as we can. This signals a major institutional push that most retail investors aren't even considering.
Well, you know, we delivered on the president's promises that he made on the campaign trail. You know, the president was adamant about creating the SBR. We wanted to make sure that we did it right in a way that respected Bitcoin for being so unique, and also gave credence to innovation in other spaces of the digital asset world. So, you know, for us here, we look at Bitcoin, it's not a security, it's a commodity. It has intrinsic stored value that's traditionally accepted. It has, as David likes to describe, the immaculate conception. There's no issuer. And you know that's why, as you saw in the executive order, we compared this to digital gold. It's something that's imperative for the United States to have, retain, continue to build on. And I think that's worth pointing out that you know the way that this is constructed, we talked about ways of acquiring more Bitcoin in budget-neutral ways that won't cost the taxpayer a dime. And what I like to say about this president, I think it's high time that our president started accumulating assets for the American people, which is what President Trump is doing, rather than taking it away. And I think that's one thing that we really wanted to make clear in this executive order. And we're looking forward to working with our partners at Treasury and the Secretary of Commerce in order to find those budget-neutral ways in which we can acquire more. You know, I've been asked all the time, it's like, how much do you want? And I said, well, that's like asking a country, how much gold do you want, right? I mean, as much as we can get.
Second, Bitcoin at these price levels, combined with an ultra-bullish macroeconomic backdrop, is what analysts call a historic entry point. Michael Saylor explains it best. Most people simply don't grasp the magnitude of this moment.
This is kind of a historic entry point because all of the risk has been stripped off the asset. Like, you pretty much know Wall Street's going to embrace it, the U.S. government's going to embrace it, and banks in the U.S. going to embrace it, which means that all the other banks will embrace it. You already know all those things, and yet the market is really skittish based upon concerns about tariffs, you know, the disposition of the U.S. economy, the interest rate forward graph. And so you see the interest rates have pulled in 30, 40, 50 basis points, and we're in this macro risk off zone. When that flips, I think Bitcoin will rip forward with a vengeance.
Third, everyone expects the Fed to keep rates high and continue tightening. But ARK Invest has a contrarian take. They believe the Fed will cut rates more than expected this year. And if that happens, Bitcoin could skyrocket. This insight really caught my attention.
What do you see as the rate path for this year? The Federal Reserve kicking off its 2-day policy meeting today. We're going to hear from Jay Powell tomorrow. How many rate cuts do you see happening this year, Cathie?
Well, we tend not to be very short term in our focus, but if we're right and inflation is going to surprise on the low side of expectations, we wouldn't be surprised to see 2 or 3 cuts. Now, if you look at an indicator called trueflation, it's probably the broadest measure of inflation out there. It is saying inflation is down to 1.65%, well below where the Fed is pinning it at roughly the CPI's 2.8%. And we believe that the combination of actually food prices have started coming down, even egg prices have started to collapse, as a matter of fact. Gasoline prices are coming down. We're seeing some rent prices coming down. So we think inflation is going to surprise on the low side of expectations for those reasons, and because innovation is inherently deflationary. And our 5 innovation platforms are all driving different kinds of deflation, good deflation, which will cause unit growth, but deflation nonetheless. So we think the Fed is going to have many more degrees of freedom in the second half of this year than most people think. We could see more than the number I just suggested, 2 to 3 cuts.
Now, here's what most people are missing. Bitcoin still has a very real shot at hitting $200,000 by the end of the year. And it's not just Cathie Wood or me saying this. Matt Hogan, the CIO of Bitwise, is confident Bitcoin could soar to 150K, if not surpass 200K, within months.
There's the strategic Bitcoin reserve. There's the SEC pulling back on essentially every lawsuit. There's progress on stablecoin legislation. There's talk of market structure legislation. There was the White House crypto summit. These are game-changing positive developments that should put Bitcoin trading at $150,000 or $200,000 today. It's been suppressed because in the short term, this overhang of the economic uncertainty is weighing on the markets. I think if that is released, we're at new all-time highs quickly, and we're on our way to where I think we'll be at the end of the year, which is Bitcoin 200,000.
If we get to Wednesday's meeting and it looks like we're not going to see much relief from the government here in the United States, what happens?
If it's sort of the tough parent, stiff upper lip thing, I think it's going to be more market uncertainty. You could see Bitcoin go back to 72,000 to its previous all-time highs. I don't think there's downside really below that. I think there's a great deal of support right there.
Of course, crypto isn't without risk. Some coins will fail while others will thrive. But if you want to play it smart, stick with Bitcoin, Ethereum, and Solana. That's exactly what Cathie Wood is doing, calling them her top 3 picks. Do you agree? Let us know in the comments, and don't forget to subscribe to Crypto News Flash for daily updates just like this. Now listen to what she has to say about Bitcoin, Ethereum, and Solana. Her conviction might just convince you too.
Story here. They are still worried about those meme coins and a lot of retail investors being stuck holding the bag. And another thing that's happening at the same time is you have a lot of exchanges looking to loosen their listing standards. Do you worry that this could go too far, that too many coins that are going to hurt retail investors ultimately will be listed on too many exchanges?
Well, I think that the SEC did a very important thing in declaring these meme coins not securities. What they essentially were saying is, we are not going to regulate them, and it's buyer beware. And so if I have one message for those listening who are buying meme coins, buyer beware. And I think the message is loud and clear from the regulators. What we think will happen is there will be some fearsome declines in the prices of some of these meme assets. And, there's nothing like losing money for people to learn. And they'll learn that the SEC and regulators are not taking responsibility for these meme coins.
Buyer beware of what specifically? Because you did say that you believe that there are only certain crypto assets that will gain the most spoils. What do buyers need to be aware of?
That the millions of meme coins will probably end up worthless. So when we're talking about the big 3, we're talking about Bitcoin, Ethereum, Solana. The use cases for those are multiplying. And we think they're going to become very important in the years ahead. Meme coins, not so.